This is an Uncovered Japan Company research report on A&D Holon, ticker 7745. A&D Holon combines industrial measurement, medical devices, and semiconductor photomask inspection. The core question is whether a small but very profitable electron-beam niche, a defensive medical base, and a near net cash balance sheet can offset a semiconductor cycle correction and a lower return measurement business. The report's starting valuation snapshot was a forward price-to-earnings ratio of 17 times, price-to-book of 1.55 times, recent return on equity near 15%, and a 64.3% equity ratio. Those figures describe a financially conservative company, but not a simple defensive one. The share price is also pricing a guided down year in semiconductors and unresolved improvement in its largest operating segment. A&D Holon's product set becomes clear in one frame. The group sells measurement and weighing equipment for industrial customers, blood pressure monitors and body composition devices for medical and consumer health markets, and Holon's electron beam tools for inspecting semiconductor photomasks. A photomask is the master stencil used in chip lithography. As advanced nodes and EUV make those masks more complex, accurate inspection becomes a higher value and higher trust task. The segment chart is the key to the whole case. Semiconductor represented only 18% of fiscal 2025 sales, yet earned a 33.5% operating margin and roughly 4.1 billion yen of segment profit. Medical and health delivered a stable 17% margin. Measurement and weighing was the largest business at 46% of sales, but earned only an 8.8% margin. The group sells the most of its lowest return product, while a smaller semiconductor niche carries an outsized share of profit. Financially, the group reached record revenue of 69.3 billion yen and record operating profit of 9.21 billion yen in fiscal 2026, for a 13.3% operating margin. The merger with Holon changed the group margin profile, but net income is less clean as a signal because tax, foreign exchange, and other items can move it around. The report's discipline is to focus on operating profit, cash, and segment mix, rather than treating any one net income print as the entire story. The balance sheet provides the downside buffer. In the report's fiscal 2025 snapshot, cash and equivalents of 13.3 billion yen slightly exceeded 12.8 billion yen of interest-bearing debt, while net assets reached 42.8 billion yen. That makes the group effectively net cash. The flexibility can fund research, weather a cyclical downturn, support dividends or buybacks, and potentially fund acquisitions. It also explains why capital efficiency has become a central investor question. Holon's moat comes from a specialized electron beam photomask metrology niche. The tools must resolve exceptionally fine patterns, and a faulty mask can propagate defects across wafers. That makes proven accuracy, reliability, and qualification history more important than simple purchase price. Once equipment is integrated into a customer's workflow, it can be sticky. The honest limitation is scale. This is a narrow technology niche beside much larger competitors, such as Lasertech, KLA, and Hitachi High-Tech. Management cannot control the semiconductor capital expenditure cycle, but it can work on the large measurement segment and capital allocation. Measurement has lagged, including losses in Europe and the Americas at times. Medical is the stable cash generator to protect, and the near net cash balance sheet offers scope for dividends, buybacks, or reinvestment. The report also notes an approximately 11.9% stake by activist Strategic Capital, making management's response on capital efficiency an observable catalyst rather than an abstract idea. A&D Holon has articulated a longer-term revenue ambition, around 150 billion yen by fiscal 2034, more than twice fiscal 2026 revenue. The report is careful with that number. It is an ambition, not a forecast, and likely requires a mid-single-digit plus organic growth rate alongside acquisitions. The key tailwinds are AI and EUV-driven mass complexity, semiconductor onshoring, and aging-related demand for health devices. The test is whether Holon sustains its technological position and whether the low-return measurement segment finally earns its scale. The valuation should be read through the cycle. The report describes forward earnings per share of roughly 165 yen after company guidance for a fiscal 2027 decline, which mechanically made the forward PE look higher even as the share price fell. Price to book, through cycle earnings, and the balance sheet position are steadier reference points. The scenario chart uses the report author's own assumptions, not targets. It shows how semiconductor recovery, measurement repair, and capital policy progress could change the range of outcomes. The bear case is straightforward. A prolonged semiconductor downturn would hit the group's highest margin business. With more than half of sales overseas, a stronger yen can pressure earnings. Holon's niche still needs heavy research investment to defend against larger rivals. And if Europe and the Americas keep losing money in measurement, or management does not improve capital allocation, the conglomerate discount may remain. These are not hidden risks. They are the operating evidence viewers can follow quarter by quarter. The concise conclusion is that A&D Holon pairs a defensible, high-margin semiconductor inspection niche with a stable medical business and a robust balance sheet. Its discount reflects a cyclical earnings correction, a low-return measurement core, and unproven capital efficiency improvement. The evidence to watch is clear. Semiconductor demand and margins, regional measurement profitability, the pace of shareholder returns, and the group's investment choices. This is educational research, not investment advice. For a much deeper look, visit the free deep dives at uncoveredjapan.com. We go beyond the headline numbers to cover the business, financials, valuation, risks, and catalysts. This video is for information and education only. It is not investment advice or a recommendation to buy or sell any security. Always do your own research.